When we look at the monthly chart of silver, there's no doubt it's going parabolic. And I'm not a big fan of when things go straight up because it means a good chunk of it, when it does reverse, will be given back in most cases. So I'm excited. I do think we're going to see silver break above the 2011 highs. I think we're going to pop and break through that. We'll probably see silver spike dramatically higher. I don't know where it's going to go, but it's rallying to the upside. You really don't want to be fighting this trend. But what's interesting is if we look at the 10-minute chart down below here, we can actually see yesterday, which was October 2nd, if we look at the 10-minute chart, there was a pretty good bout of selling, high volume selling in silver futures. I mean, we got right up to 48, like right up to, pretty much testing all-time highs. So there was definitely some big selling going on. If somebody lightening up their portfolio, we kind of saw that another bout of selling, not quite as heavy the day before that, but there's definitely some sellers we're hitting resistance and some sellers are unloading. I mean, if we take a look at gold, it's had a beautiful run. We've taken an extra gold trade beyond just holding physical metals. We've played this Fibonacci move, or we're playing this Fibonacci move here, which comes down to this multi-month consolidation. And this is one of the trades that we've got going on. So we had this rally up, we had this pullback, and this is a giant pennant, kind of a bull flag formation. And more or less, when it comes up and hits this 618 and has a pause, that is usually when we're going to see it want to run up to the next target, which is that about 4,100 that you and I talked about last month and the month before. I mean, this chart pattern has lasted all year. So these are long-term targets that we're finally working up to, which is pretty exciting. So, we're really just letting gold continue to work itself up. It's got a tight little sideways pause here over the last 3 days. I mean, it's primed and ready to pop to 4,100 pretty much any week now. And once it hits that level, it'll be interesting to see how it reacts. Does it pause and pull back really quickly and build another little launch pad to go higher? Or are we going to, blast through that?
Charting gold's periodic cycles reveals a rhythm. Sharp advances, sideways rest periods of a few months, then another impulsive leg upward. A recent consolidation of about 3 to 4 months mirrors earlier phases. If history repeats, the next leg could ignite soon. That said, markets rarely move in straight lines. A break above $4,100 may prompt hesitation, profit-taking, or a shallow pullback before continuation. The key is patience, watching how price behaves at critical zones before betting on whether it pauses or powers through.
And I think we're in this unique situation where not only do I think the target is going to be hit, and you and I touched on this in our last session, which I think we could see gold and silver kind of go parabolic, where it could blast through this and actually keep picking up more speed and go parabolic in a pretty big way. And silver is very similar from that. And when we look at the monthly chart of gold and silver, you can see, I'll just zoom back so we can see these previous. We're starting to go pretty parabolic, where we're really popping, and another big month, the green bar here is telling us that, hey, yes, it's money's been piling in, but it might be starting to move a little too far too fast. And so typically after that, we usually see some type of pause and some consolidation. And the question is, does it build a nice bull flag formation or pennant formation before it shoots up and goes even higher? We just really have to take it one bar at a time. But right now, I think we're going to see gold and silver push higher, blast past that. And the question is, where is the top in this kind of feeding frenzy? We got central banks piling in, we got individual investors piling in. Nobody wants to get rid of it because it's a winning trade, and natural tendency is to not sell winning trades. So we're just in this phase until this momentum stalls and a bit of selling kicks in. People aren't really thinking of selling, so it's going to keep the price wanting to run higher.
As gold climbs, intermittent bursts of heavy volume selling have already appeared, especially on short intraday charts. Big players trimming positions is not a red flag per se, but it signals increasing volatility. In such an environment, we expect oscillations, sharp pullbacks, sudden surges, and battles between worry and FOMO, fear of missing out. A week or month may see gold test support levels before resuming its climb. For now, the trend looks intact but fragile. Each candle matters more in this phase.
I'll give you one from that has helped me out. If you pull up a weekly chart, Chris, you remember your Fibonacci said 4,100. On a weekly chart from when we first broke out back about 2 years ago, and then into early 2024, price was going sideways for 90 days, broke out in March of 2024, rallied 15 or 20%, consolidated 3 months, broke out, rallied 15 or 20%, consolidated 3 months, broke out earlier this year, rallied 15 or 20%, and now since just wrapped up a 4-month consolidation. And guess what? It's rallying 15 or 20% again. That would project to 4,100.
There you go.
So if you believe in the bull market, why not, get there to 4,100 sometime this month or next, go sideways for 3 or 4 months while we shake everything out.
Yep.
And then the fun really gets going in 26. Anyway, no one here to listen to me
The fun
talk.
is,
They
the
wanna
fun
hear
is
you.
already really going in the precious metal space. It's
That's true.
we got to enjoy this ride, right? The ride's been on
Right.
for a while, actually,
Right.
the past year and a half, but now it's really getting explosive, especially in the miner space. But let's take a look at silver, as you
Yeah,
said.
let's take a look at silver, because that's the one where on my site, all over Twitter, there's this kind of dichotomy. People are excited. It's like, hey, what's going to happen? Could, gold's moved all-time highs, 80% past its old all-time highs. Silver just getting back there. And we all remember what happened in 2011 at these price levels. Where do you stand with all this, Chris?
Yeah, well,
Silver is riding a similar wave. On monthly charts, it too shows parabolic moves, strong trend, compressed retracements, and breakouts. Many expect it to surpass its 2011 highs, perhaps even reaching $48-50 per ounce. But parabolas often come with reversals, sharp ones. Recently, high-volume selling hit silver futures, particularly near resistance zones. The metal's industrial use adds a complexity layer. Shifts in demand, supply stress, or policy changes could accelerate both upside and downside correction phases.
when we look at the monthly chart of silver, there's no doubt it's going parabolic. And I'm not a big fan of when things go straight up, because it means a good chunk of it, when it does reverse, will be given back in most cases. So I'm excited. I do think we're going to see silver break above the 2011 highs. I think we're going to pop and break through that. We'll probably see silver spike dramatically higher. I don't know where it's going to go, but it's rallying to the upside. You really don't want to be fighting this trend. But what's interesting is if we look at the 10-minute chart down below here, we can actually see yesterday, which was October 2nd, if we look at the 10-minute chart, there was a pretty good bout of selling, high volume selling in silver futures. I mean, we got right up to 48, like right up to, pretty much testing all-time highs. So there was definitely some big selling going on. If somebody lightening up their portfolio, we kind of saw that another bout of selling, not quite as heavy a day before that, but there's definitely some sellers we're hitting resistance, and some sellers are unloading. It's actually the same for gold. If we look at gold 10-minute chart as well, you can see we've had, if we go back, there's 2 days of very strong selling in gold, a couple sessions ago, and again on October 2nd. So, this is one of the early signs that there are some big institutions or some big investors that are saying, hey, we're getting frothy. And some people are obviously locking in some gains, lightening up contracts or their portfolio positions, which it's not a bad sign. This just means volatility is picking up, which means it can pull back and it can rally very quickly. So now we're getting into the battle of fear of giving back too much gain and fear of missing out. So we're going to have waves of selling, of people saying, oh, I'm worried. And then we're going to have waves of it as it pushes higher again, of people saying, oh my God, I got to get in. Everybody's making money but me.
Institutional forecasts are rallying with the momentum. Goldman Sachs recently raised its gold projection to $4,900 by December 2026 amid sustained central bank buying. Some baseline forecasts for 2025 place gold between $3,750 and $4,100. In silver's case, resistance near $50 is widely viewed as formidable. Yet numerous analysts caution that steep upward runs often trigger retracements or consolidation phases. The path ahead could twist sharply before clarity emerges.
And so we're in this phase right now where the volatility starts to pick up. Bigger rallies, bigger pullbacks, bouts of selling, big bouts of kind of FOMO buying. So that's kind of where we're at. I mean, at this point, you really just have to let this, the next upside target really for silver is pretty much all-time highs. That's what I think it's gunning for, somewhere up around 49, $50 an ounce, and we just have to let it unfold and let the price continue to kind of blast higher until we see some signs of a short-term reversal and pause in the markets.
How would you even try to draw a projection? You know, when it does, I'm not sure it'll get through that 48.50 level on the first try, given how gold traded a couple of years ago when it was trying to make all-time highs. But when it does break out, Chris, it's when you get in all-time high territory, how do you project where it might go next?
Yeah, I mean, it'll be tough. Like, you kind of need more price action to unfold. I mean, a really basic way would be you take the depth of the price action here, and you would literally just stack it on top. It's a pretty barbaric way. It does work. It does give you an idea of the volatility through this whole kind of basing and rally. You could see that move to the upside, which, you know, puts us around $85. I did talk a long time ago that somewhere in the 80s, if we break out, is potentially where silver could, you know, run into, like spike and shoot higher into. So just based on this long-term chart pattern, that's kind of the next target. At this point, it's hard to get a gauge. There aren't any other Fibonacci tools, like based on these runs here and these pullbacks, none of them break us up into where we are right now.
In an accelerating market like this, chasing gains without discipline can be dangerous. The optimal approach: ride the trend, but trail protective stops to lock in profits. Avoid attempting to pinpoint an exact top. Those moments often emerge in hindsight. If a sharp reversal appears, stay nimble and be ready to step aside or re-enter after consolidation. Watch for sector interplay, miners, industrial demand, macro policy. Ultimately, gold and silver may continue their advance, but only if momentum holds and volatility is respected. The ride is thrilling, but not without danger.
Now, we can't gauge beyond it. We've run past the target that I've had in the previously, and after that target, it goes to all-time highs, and then from there, it could just be the depth of this market. So it's pretty exciting. I mean, silver could really unwind. I had a member mention the other day, you know, silver's at all-time highs, but if you figure in inflation and stuff, it's really nowhere near that. And maybe that $85 an ounce brings us back to what it, is worth in today's dollar and all of that stuff. So it'll be interesting to see where this unfolds. We're definitely in that kind of roller coaster / rocket ship ride. These silver and gold rockets are moving higher, and the miners are a pretty good indicator of how parabolic things are. If we just look at the GDX and go back, you can see the 2011, 2012 highs. We're now like really shooting straight up, and things are skyrocketing. It's the same with silver miners. If we look at the SILJ, it's also going parabolic.
Yeah.
And so, is it as fun as exciting it is, we do need to be aware that usually when things go straight up and everybody's talking about it, everybody seems to be piling in. And if you say anything negative about this space, they cut your head off. That is like a red sign that, hey, we're probably going to see a little bit of profit taking. We're going to see prices probably put in a short-term top and some type of pullback to cleanse the market a little bit. And that's where I think we are. I don't know where the top is. It's hard to pick a top in a bubble. It's not worth trying. Just follow the trends up, ride them higher, ratchet your protective stops up. So if it does have a big reversal, you can at least lock in gains in case you're not around. And then you can reevaluate when to get back in. Because, each time we've seen a lot of the miners and silver miners get up with these parabolic moves, we usually see a good chunk of that move given back. And it's usually right when people don't think it's ever going to happen. Everybody's like, this time is different, which every time it's different. So that's kind of the scenario. We're in that perfect storm for precious metals, and everybody is on board, and they're riding it up.